Ladies and gentlemen, good day and welcome to SPML Infra Ltd Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Pranay Prem Kumar from Adfactors PR Investor Relations team. Thank you, and over to you, sir.
Good evening, everyone. From the senior management, we have with us Mr. Manoj Sigga, Director, Commercial and Chief Financial Officer, and Mr. Malay Kanti Chakraborty, Executive Vice President. Before we begin the conference call, I would like to mention that some of the statements made during the course of today's call may be forward-looking in nature, including those related to the future financial and operating performances, benefits and synergies of the company's strategies, future opportunities, and growth of the market of the company's services. Further, I would like to mention that some of the statements made in today's conference may involve risks and uncertainties. Thank you, and over to you, Mr. Manoj Sigga.
Thanks, everybody. Good evening, and thank you all for joining the Q1.
I'm sorry to interrupt you, sir. Sir, your voice is very muffled, sir. We're not able to hear you clearly.
Good evening, and thank you all. Is it clear now?
No, sir, it's still muffled.
Is it clear now? Hello? Now?
I'll disconnect and try reconnecting you, sir. Just allow me a moment. Ladies and gentlemen, thank you for holding the line. We have the line for the management reconnected. So please go ahead.
Sorry. Thank you once again. Good evening, and thank you all for joining the Q1 FY25 earnings conference call of SPML Infra Ltd. I give you a quick overview of the industry business update, and will now speak through the financial performance.
I'm sorry to interrupt you, sir. We have the line for the management reconnected, so please go ahead.
Sorry, some technology issue. Now is it clear?
Yes, sir. Please go ahead. Please go ahead, sir. We can hear you.
Okay. Good evening and thank you all for joining the Q1 FY25 earnings conference call of SPML Infra Ltd. I'll give you a brief overview of the industry trend, business update, and will also take you through the company's financial performance. As regarding water sector, despite global headwinds of war and economic slowdown, Indian economy continue to display reliance growth momentum with 8.2% growth in Q3 FY24. RBI continued with its expectation of 7.2% growth in FY25. Infrastructure plays a pivotal role in accelerating India's overall development and will be the major driving factors towards the goal of becoming a 5 trillion Indian economy by 2025. This is further strengthened by the government allocation of 11.11 lakh crore towards the infrastructure development across the country. Given that India has become a water-stressed country, creating robust infrastructure needed for water security is now essential. The recent Union Budget gave emphasis on building water supply, sewage treatment, and solid waste management projects with substantial budget allocation along with services for 100 large cities through bankable projects in partnership with multilateral development banks in commendable. We expect that Indian water market will grow, creating better opportunities for us. It is estimated that by 2050, water availability would only be around 750 billion cubic meters as against the demand of 1,500 billion cubic meters, making a water scarce country. India water infrastructure market is estimated to reach at 2.08 billion by next year, registering a CAGR growth of 9.75%. In the past 5 years, the Government of India has undertaken the improvement of water being a scarce resources and being essential for human life and economic growth, has initiated various initiatives focused towards water distribution and wastewater treatment. Some flagship programs including Jal Jeevan Mission, Urban and Rural, Amrut 2.0, Namami Gange, along with other schemes such as Padmanabhan Mantri Krishnation Yojana, Har Khet Ko Pani, Dam Rehabilitation and Improvement Project, DRIP Phase 2 and 3, National River Linking Project, National Watershed Project, Atul Bhujbal Yojana and National Hydrology Program. All these schemes put together have an estimated total outflow of approximately 10 lakh crore. SPML Business and Operations. As we complete 43 years of operation in water supply and distribution and wastewater treatment segment this August, I once again welcome you to the start of a fresh financial year and another quarter of a strong performance. We pride in being one of the leading integrated water management company with a key focus on water infrastructure development. With a strong pre-qualification criteria coupled with superior project selection technique, we are assured of participation in the government initiative towards the water infrastructure. With our strength, significant capabilities and expertise, we aim to stay ahead of our competitors. We have completed almost 700 turnkey projects across India and provided drinking water facility to 50 million plus people. We have the strong belief that India has the potential to reduce the gap between the water demand and supply. Given the immense opportunity in the water business, where the company has significant expertise and strength going forward, the company wants to exclusively focus on the water sector, particularly on the bulk water supply, as it offers better project execution and financial return. With 10 years of experience in handling the O&M of individual water supply projects, the company has a superior track record in water EPC sector. We have a requisite pre-qualification in executing several individual drinking water supply and management projects worth over 1,500 crore, along with laying down over 10,000 kilometers of water pipeline projects. We have a long-standing relationship with various central and state government bodies. We seek to leverage this strong position to continue building over ourselves to become the leading player. Our focus is towards building a strong order book by bidding for selected but targeted projects with complete life cycle engagement and seeks to optimize cost by executing projects on a subcontract basis, which would eliminate bank guarantee, avoid penalties, and remove execution delay. We seek to be risk-averse by applying escrow mechanism to reduce strain on the working capital. Our focus from here on would be to work on increasing our profitability rather than just working on our top line by understanding higher margin projects and moving towards the funding project and cash risk states where payments are guaranteed. We have already placed bid for certain projects and we are positive about receiving the same. We are pleased to inform you that the company is embarking towards the substantial with the publication of our first business relationship and sustainability report, BRSR. We are taking a significant step in aligning our operations with global environment, social and governance ESG standards. The report not only showcases our current non-financial performance across environment, social and governance related parameters, but it also set the stage for our future commitments in this place. The said BSR report will be part of our FY24 annual accounts. With the aforesaid focus strategy of the business, the promoter is processed to improving the liquidity of the company and infused over rupees 150 crore in last 5 years and successfully completed the debt issue with the lenders and ready to grow the company along with the growing opportunity in the water sector. As a process of growth, the company is further exploring the possibility to raise the funds to improve the liquidity further from the current level. In spite continuous infusion of funds, the promoter stake further reduced due to allotment of 12.5% shareholdings to the lenders through NARCL in the process of debt resolution. Comes to the SPML quarterly performance, we would now move towards our quarterly financial performance. On a standalone basis, we recorded revenue of 221.3 crore in Q1 financial year 25 as compared to 256 crore in Q4 financial year 24. This is after excluding the one-time receipt of Vivad Se Vishwas scheme of 208 crore. This reduction is primarily contributing towards the slowdown of operation due to election, the impact of which will also remain partly in Q2. The company emphasizes that the operation after Q2 onwards will improve gradually. Our EBITDA was recorded at rupees 27 crore compared to 30 crore in the last quarter. This 30 crore is after excluding Vivad Se Vishwas receipt of 208 crore and exceptional item of rupees 170 crore included in the other expenses. We recorded a PAT of rupees 13 crore in Q1 FY25 as compared to 17 crore in last quarter. The difference is mainly on account of applicability of MAT tax in the current quarter and gain on exceptional item in the last quarter. For Q1 financial year 25, our EBITDA margin and PAT margin stood at 12% and 6% respectively, which we aim to sustain going forward. Currently, there is more than 30,000 worth of order availability towards the various states, and the company is targeting to participate in more than 10,000 crore worth of order this year, and we are expecting to achieve our required target order book in the aforesaid orders. With this, we continue our opening remarks. We conclude our opening remarks. Thank you for listening to us. We now open the floor for any question and answer session. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, hello sir. Thanks for the detailed explanation.
Thank you.
So in terms of bid pipeline, as you said that 10,000 crore bid pipeline we have, and we are going to get significant out of that. So how, in terms of BG requirement and all, how we are placed? Do we need more fundraising to get these orders, or we are adequately placed as of now?
At the moment, as I explained, around 32,000 crore of tenders are floated in the market at various states, out of which, as we have a very robust system of selecting the order book, which is very low risk averse and which is profit making and easy to execute, fast to complete. So out of these, we have around 10,000 crore of order book we are targeting that we will bid, and from that we are expecting roughly around 2,000 to 3,000 crore, which we are targeting for the current financial year. We will get with that. The BG requirement normally starts from 1% to 5%. It depends upon bid to bid. We have roughly around 100 crore of 84 crore of fixed deposit, which is in our hand. We are expecting further amount from Vivad Se Vishwas of approximately around 40 crore. So we have some warrant of the promoter. So roughly around 150 crore is availability is there, visibility is there for the fund for the BG purpose. We are exploring the possibility of raising because of the various opportunity available in the water sector, and we can accelerate our growth. We are exploring at the company level that whether we should target to further fundraising, but till date there is no conclusion has happened into this aspect.
Okay. And what is the current order book position as of now?
Current order book we have around 2,000 crore.
Okay, because as per last PPT, order book position was 1,300 crore. So have we added 700 crore?
So this order book is including of our JV. So this is roughly around 2,000 crore inclusive of all.
Okay. And one more question with respect to other income and interest. Can you explain, how we are going to account this 270 crore over next 8 years, or it will be accounted over? How it is going to be accounted?
This the difference between the two options, 276 crore.
Yeah. So
yes, but the
on quarterly basis, how will?
Pardon?
On quarterly basis, you are going to account this for how long?
It is 8 years. 8 years basically, as per the Ind AS requirement. Since we have recorded the loan at the NPV and the benefit of also the two schemes we have referred as the deferred revenue income. So both will be continuing for the next 8 years.
Okay. So every year there will be close to 50 crore other income from this accounting, right?
Every year roughly around, no, this will proportionately keep on reducing based on the repayment to the NARCL.
Okay.
So this year it will be roughly around 48 crore and roughly around 32-33 crore will be the interest cost. But both are only provisional entry.
Okay. And this 600 crore zero coupon NCD, which is as on June after making payment of 225 crore?
NCD, it is in our sanction letter, it is very, very clearly written the day we pay the 700 crore, out of which 224 crore we have already paid, the NC will be relinquished immediately. So we don't have to pay anything to that.
Okay. So technically we have close to 475 crore debt, right? After paying 224 crore.
We have that, and this year we have identified 40 crore of the property, which is the advanced stage of negotiation with the buyer. So that 40 crore will further reduce into this year as a loan.
Okay. Thank you. All the best.
Thank you.
Thank you. We take the next question from the line of Chirag Jain from Yoga Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I had few questions. So first question is on the fundraise. So what would the fundraise size that we are looking for?
At the moment, it is at very drawing board level, so we will not able to conclude. But we are exploring the opportunity. At this moment, we have not decided fully.
So it would be in the second part of the financial year?
Let first we internally discuss, and then we will put up into the board, and once we have, then we will do the process. But if it happens, it will be in this year.
Okay. Got it. So next on the revenue and margins, so how are we looking at FY25 going ahead at revenue and margins?
As I told you, the water sector is very growing. Water sector opportunities are very high. Our qualification is such that we are qualifying in almost all the orders which are coming because of our past 30, 40 years of operation in the water sector. And we are targeting, even after this long voluminous opportunity, we are targeting very limited, high profitable, fully funded, easy to operate, easy to execute project in the range of 3,000 to 4,000 crore in the current financial year. So and with the EBITDA margin of reasonably decent side, more than 10%. So this will improve our profitability going forward.
Okay. Sir, so let's try it other way. So we have, you mentioned about we have 2,000 crores of order book in hand currently. So what's the execution period? So what part of the 2,000 crore would be booked in FY25?
This will be completed into next 2.5 to 3 years. So okay. You can make around 40% this year, 50% next year, 10% next to next year.
Okay, fair enough. Understood.
Approx.
Okay, yeah, no works. And the margins remaining in double digit around.
These are the old book. Here the margin may not be double digit, but the new order, whatever we are targeting, our target is margin more than double digit.
Okay. So have we won any new order during the quarter one?
No, quarter one, if you see, after the election, up to the election, there is a Achar Sanhita, so no order initiation and tender initiation has happened. It started last month, and the process will take 2 to 3 months. So by that time, we should get one order.
Okay, fair enough. That's the last question before I get back in the queue. So I just wanted to know, is there any liability remaining that remains to be booked till date on the balance sheet? So any equity infusion or any liability that's remaining to be booked on the balance sheet?
So all the assets and liability we have booked, we have reviewed very, very extensively in the last year accounts, 31st March. And whatever is required to be provided, etc., we have provided. So I don't think nothing is left. Then it's a normal business transaction. Whichever will happen, will keep on accounting.
And no receivable is left. Bad debt is left on the balance sheet. Bad debt also.
So we have made extensive provisions. So I don't think now anything is pending.
Yeah. So thanks for the opportunity. I will get back in that case.
Thank you. The next question is from the line of Tej Patel from Nivesh I. Please go ahead.
Yeah, thank you. So, am I audible?
You are audible, Vishal.
Yeah. Thank you so much for the opportunity, sir. Sir, I'm not getting on how come our order book with 2,000 odd crores. If at the end of the last quarter, our order book was 1,300 crores, and we haven't received any order inflow in this quarter. So can you elaborate?
As I told you, there is if our order book is roughly around 1,100 crore, and then means you can say 1,000 crore is our order book, 1,000 crore is the JV book. When we taken the business on the JV, that order is also executed our share into our accounts. So both together, the last earning call, whatever I have told, that is my order book, which is around 1,000 crore into the current, as of now, because we have booked certain amount into the last quarter.
Or it's out of the 2,000 odd crores, 1,000 crores is with SPML, right?
Everything by us and 1,000 crore is by through a JV.
Okay, got it. Sir, how much would how much would be the O&M part in this order book?
O&M part, I will check, but it will not be much. Roughly around, it will be around 100 crore. But I'll check and let you know.
Okay.
It will be around 100 crore.
Okay, got it. So out of 1,000 odd crores, 100 crores would be around O&M.
Right.
And sir, these are all direct orders won by SPML, or you have some subcontracting orders also included?
No, this is our order.
Okay. And sir, you told in last call that we were supposed to win a arbitration award from the state of Arunachal Pradesh, which was at in its final hearing. So any move on that,
It's going on. And but it is really at advanced stage, so we can expect any day orders of that. Maybe in September to get the order of that. But the execution will further take 1.5 years. So the money receipt we can target in next 2 years.
And so we were also planning to sell around 15 odd crores of non-core assets to pay off the bit of obligation from the NSL.
That we have decided roughly around 40 crore of non-core assets we are selling, and we are paying to the NARCL. That work is going at very advanced stage. We have made the publication, and now the final offers are going to come. That is going to be settled and paid by January or February.
Okay, got it. And sir, when as we scale up throughout this year, why could we see the margins, settling up for this year and let's say the next year? Could it touch, let's say 6, 7 or 8% this year, and probably let's say a normal 10% which you are guiding next year?
That, as I told you, any order book, because of the enough opportunity in the market, and basically SPML size and the order book, there is totally disproportionate in nature, because if I can bid, if it is a 1 lakh crore, I can bid at 80,000 crore, but I have to take the order book. I am very, very selective, because as I told you in my earning speech, that we will not be rushed towards taking the order. We will take the quality orders, high profitable orders, and we will see that our order book, our turnover, our order size, which we are targeting 3,000 to 4,000 crore this year, with a high profitable business, which is easy to operate, easy to complete, good estates, fully funded, and DPR is completed. So if it is that, and we are also targeting the bulk order where the piping is there, so that we can do the escrow mechanism with the pipe manufacturer, which will reduce my working capital substantially. So these are few parameters by which we are targeting the orders, and there is enough order in the market of those targeted areas. And whatever order we are going to select, the profit margin will be more than 2 digits. That is our minimum target area for taking the business.
Got it, sir. And any move, towards, let's say, final stages for other also arbitration awards which we have already filed?
All are working on, because the first arbitration award is definitely on the Arunachal, but all are progressing at a very proper stage, and development is happening. So our target is that we will get 2 years Arunachal award, and within that time, or maybe 1 more year, we will have 1 or 2 more awards. So the total award book in our book is roughly around 604 crore. And we have to pay to NARCL roughly around 400 crore, so which is the leftover amount. So we will have decent size of earning in next 5 to 6 years from the